This morning, homebuilder sentiment plunged in July as buyers pulled back, marking one of the largest single drops in the survey's history. Meantime, the homebuilder stocks, Lennar, KB Home, D.R. Horton, seeing their shares fall 30% on the year. They are down today as well, even though we are seeing some strength in the consumer discretionary group. Some of the travel names are doing well today. Joining us now to discuss, Ivy Zelman of Zelman and Associates. Ivy, this was an ugly drop in homebuilder sentiment. Where are we in the process of the housing slowdown, do you think?
Well, first, thanks for having me back, Sarah. I would say that the rate of change has been pretty dramatic, and I think we're just in early innings. We've seen deterioration that really started to inflect in May, and the acceleration of that negativity has just been continuing through early July. I'd call it Mach speed in some markets. It does vary by market. So we've seen the biggest rate of decline probably in Phoenix, with the Southeast and Florida markets holding up better. So it's not across the board. The sentiment's negative because affordability is so stretched. But I think that it really varies by market right now.
Diana Olick, our housing reporter, noted in an email to me that the survey showed 13% of builders say they had dropped prices last month, even though she says that the big builders in their last earnings said they wouldn't have to. So what is going to happen with prices?
They're going to have to drop prices, Sarah. No question. We're seeing significant increase in incentives. We're already seeing price cuts. Again, somewhat market dependent and price point dependent. On the first-time buyer market, where affordability is extremely stretched. In fact, affordability is worse than it was back at the peak of the last boom period on how we look at the index. So I think you're going to see that price cuts are just, inevitable.
Is it in the stocks? Some of these, I'm looking at Lennar, down 34% off the highs. They're down about 30 to 40% on the year. Is it already baked in, or you think more bad news to come?
Well, I think that because I really think we're in the early innings of what could be a prolonged downturn, and we're seeing inventories which have been steadily rising with demand plummeting in many markets. I think that we're not seeing enough pain yet. I don't think it's time to start accumulating here in terms of the home building shares. I think that we've got more capitulation that has to come to fruition. And you don't fight the Fed, Sarah. We're still in a tightening cycle. So these stocks don't work when the Fed is raising rates. And we know that inflationary pressure that we're feeling is not going away anytime in the near term. So I would say that there are going to be better opportunities. And as we see stocks that the builders have outperformed over the last several weeks, I think if the stocks are continue to rally, I'd be taking profits and selling into that strength.
So what I'm just going to push you on more specifics, Ivy. When you say you expect a deeper and more prolonged plunge in the market, what are we looking at here, and for how long?
Well, we expect the overall downturn to last throughout at least 23 and into 24. We're expecting home prices to decline nationally, both in the new and existing home market in the low to mid-single digits. We are feeling it right now that we might be even conservative. I think what you have, Sarah, is a backlog that's at the highest level since 2006 for the single-family market. We have a tremendous amount of builders that are rolling out new communities. A lot of those communities where they are bringing on inventory that's spec, and they're going to monetize that inventory, and that's going to result in pricing pressure. And we're seeing a big increase in cancellations, albeit from historic lows, but builders are canceling some people in their backlogs just because they know they won't be able to afford, as well as people are getting cold feet. And we're seeing a lot of those short-term rental private investors that have portfolios of assets that are now recognizing their rental income's not going to be where they'd hoped it would be, or their costs are rising. So you're seeing a lot of non-primary sellers in the market. So I think we're really, unfortunately, just in the early innings. And I would think that this could be a 1 to 2 year correction, if not longer, depending on the economy.
And sell the rallies in those stocks. Pretty bearish. Ivy, thank you very much for joining us,
Thanks
especially
for
on a big day
having
like
me.
today.
Thanks, Sarah.
Ivy Zelman, thank you.